All right, first I want to start off with your quarter. Congrats on the quarter you beat. When it came to EPS, what was the driver of the beat?
For us, really strong top-line revenue growth. Net interest income was strong. We've had good loan growth. We've had almost $1.2 billion in loan growth, kind of a 10% annualized growth rate over the last 6 months. That was a big driver for us. And then on the fee revenue side, operating revenue was really strong for us. $123 billion of assets under management in our wealth division drove strong fiduciary fee income growth. And so it was a big quarter for us on the top line side, so allowed us to have a beat on the bottom line. So we're really excited about the quarter. Thank you.
All right, I would imagine you're facing a lot of questions about credit from investors, probably analysts as well. So what you said was you're maintaining pretty conservative reserves and you expect credit to normalize. Exactly what does that mean? How do you see the state of credit right now?
I think credit for the industry overall, despite the press over the last week to 10 days or so, is still very benign. I think from my perspective, we talked to the analysts about credit normalization, kind of a reversion to the mean over time. For BOK Financial, we've always been an outstanding credit underwriter. If you go back to even the great financial crisis, we were the largest bank in the United States that did not participate in TARP, largely because of superior credit outcomes. And so we understand credit. We've done that very well. But if you look at the industry overall, we're still in a very unusually good credit period. And so as we talk to the street, talk to analysts, talk to the rating agencies, one of the things we talk about is, look, there's going to be a reversion to the mean. Credit will begin to normalize. It is unsustainably good. I mean, our net charge-offs over the last 12 months are less than 5 basis points. Typically, you're going to get, for us, somewhere between 20 and 25 basis points on average. So our criticized levels are very low. They're not just a little more than half of what they were pre-COVID. And before COVID, those were very good numbers. And so I think you're going to get a little bit of adjustment as the economy just begins to normalize again, where credit metrics do slide negatively, but they're still very good judged on absolute terms over time.
Stacy, I wanted to let you make your point there, but you highlighted some issues. So if right now we're in an extremely good period and it's going to normalize, doesn't that create the potential for the quote-unquote cockroaches that Jamie Dimon talked about to be exposed if this is an especially good time? The reversion to the mean, I would imagine it would be more charge-offs and more issues.
There almost absolutely will be more charge-offs as we move forward through the economic cycle. But look, banks are in the risk-taking business. We make loans, and through credit cycles, through economic cycles, there are times where borrowers cannot repay their debt. And that is one of the things that can differentiate a financial institution is how well are they doing at underwriting credit, something we do particularly well and have demonstrated that over a very long period of time. But as you think about the industry is very well positioned to absorb increased credit losses because they've been so low. You're going to get a point in time where they'll just go back to normal. So the cockroach comment was a bit unfortunate in the sense that it appears that most of the credit issues that have certainly surfaced in the media most recently are related to fraud. And fraud is very difficult to underwrite. Character still is a critical aspect of underwriting as you think about the borrower. And that's one of the things that distinguish us is we have deep relationships with our borrowers, which will help mitigate that. But it's still a very difficult thing. And in my mind, at this point, not representative of broader underlying weakness in credit in the industry. I think, we need to see that over time. And the economy is still just too strong to really see. As we look out even 6 months, 9 months, we're really not seeing credit beginning to normalize. And we think that it will. It has to. It's unsustainably good right now. But the economy is still doing too well to have broader credit losses systemically across the industry.
Stacy, one other thing I want to talk to you about very quickly. We can't have as long of an answer as we did about credit, but I understand you wanted to really explain your position. You say M&A is actually a tailwind for your business. Are you looking to acquire a different bank? Or are you saying the disruption from the M&A is creating opportunities to gain depositors or gain other businesses?
Yeah, for us, it's the disruption that M&A occurs. I mean, you're asking customers to go through a technology transformation. You're asking employees to make cultural transitions. Our footprint, we've made a good living off of being a disruptor, being in a position to accept talent and new customers and prospects when there is transition and change. And we're in great footprint. And our 8-state region. And so we're in a position to take advantage of that change and disruption that's going to happen. We see that as a real opportunity for us.